The Morgan Report with David Morgan.
David Morgan from themorganreport.com with you on Friday, the 8th of May, 2020, for this week's Weekly Perspective. Well, I'm going to start off with a bit of an ad here. This is The Money Show, and I will be one of the speakers. I will be speaking Wednesday, which is the 13th, at 1 p.m. Pacific or 4 p.m. Eastern. And it's free. So if you just type in Money Show Virtual Event, you'll find it. And the registration is in the upper right-hand side. And for those that follow my work carefully, I will be doing something I've done before, which is if silver were treated like gold, the presentation will be similar to what you've seen, although I am making some changes and it will be very brief. The reason you might consider watching it again is that there will be an open forum at the end to take questions, which means that, if you're willing to watch it another time from, again, probably a little change in the slide deck, you'll be able to hopefully be able to ask a question. I'm planning to do a minimum run through on the slides and leave hopefully a fair amount of opportunity for everybody to ask a question that wishes to do so. So let me start, as it's been my habit the last couple of months, talk about the U.S. stock markets in a very general way this week. But Cinco de Mayo, earlier the week, stocks actually started to show some strength again. They're kind of going back and forth. Basis the Dow Jones Industrials, it's bounced off the 50-day moving average to the upside, and it's still under the 200-day moving average, although it looks like it may give it a challenge. My take at this point is it may get up to that level and then fall off. I don't see this rally going a whole lot longer, but I could be wrong. Let's see what the market has to say about that. As far as the SPX, the S&P 500, it is over the 50-day moving average and has already kissed the 200-day moving average and fallen back, and now it is attempting to go through it once again. Semiconductors are pretty strong. The tech stocks have been looking pretty good this week. Apple, of course, one of the darlings, has pierced through both the 50-day and the 200-day moving average. Google has done the same. So your FANG stocks kind of are rising to the occasion, which isn't surprising. It's basically really the only stocks that performed exceptionally well during a lot of this move. A lot of it was really attributed to the FANG stocks alone. I'm not saying that's the only thing that happened, but if you do a weighted average and take a look at that, the facts speak for themselves. Again, semiconductors and communications, pretty strong this week. Durable goods, discretionary consumers, those type of stocks are actually very strong at the end of the week. And that's about all I'm going to say about the stock market for now. So taking a bigger view of the world economy, according to this Bloomberg article, the world economy plunged 4.8% in April. Bloomberg tracker shows. Bloomberg GDP growth tracker dropped sharply again in April, indicating the world economy contracted at an annualized rate of, I'll call it 5%, from a drop of 0.8% in March and a far cry from the growth of 4.2% at the start of the year. So, of course, if you take the plus 4.2 and the minus 5, that's like a 9% drop, but we don't want to do that, do we? And this from the AP, the UK economy forecast to shrink by the most since 1706. When I said the next depression will make the last Great Depression look like a small technical correction, was I exaggerating? I don't know. I think not. I hope I am. Time will tell. But this is an interesting headline. Biggest scenario to the downside since 1706. Quite a statement. This is out of London, obviously, and the Bank of England warned Thursday that the British economy could see the deepest annual contraction since the Spanish War of Succession a little over 3 centuries ago. And there's some few lines in here. The whole article, of course, is about a 5-minute read. Many economists think the bank is being too optimistic. While economies can easily be turned off by their governments, it will prove much harder to flick them back on. And this is a main point that I've given in interview after interview after interview over the last several months, really. And my main point being, From Joseph Taylor, The Collapse of Complex Societies, and my words, not his, but once a society starts down, be it economic, be it war, be it agricultural, be it weather, the cause can be important if you want to make it important. The important point I surmised was that whatever causes the situation, pandemic, whatever, once it starts down, it doesn't come back. Now, it doesn't mean there won't be some up and downs. It's like a bull rally within a bear market, which is what I think we're seeing in the stock market right now. I could be proven wrong. We'll see. Situation similar here where, this CV19er type situation starts to wane and things start to go back to the new normal and things pick up and the numbers look better and all that I anticipate happening. However, it will be more or less a bull market rally within a bear market trend. The overall contraction in the global economy continues, in my view, and it's been accelerated greatly due to the 19er. And that means that we need to adjust accordingly. Doesn't mean the end, doesn't mean it's all over, doesn't mean give up, doesn't mean any of that. What it means is we have to make adjustments and we have to be more resilient to the situation that we are actually dealing with. And the next up is Strategic Culture Foundation. Tom Lungo, hopefully you pronounce that somewhat correctly. Excellent article, Tom. We'll go through it, but he talks about the cash is trash scenario post-COVID. And he gets right to the heart of it right away. Basically what he says is, look, the elites say cash is trash because they want a cashless society. And this is a fact. The work I'm doing with David Havner on The Last Evangelist, one thing I'm certain about is that we are moving or implementing a cashless system. This is what the elites want. Goes on to say, the article's only 5-minute read totally. The easiest way to affect it is to create digital money at the stroke of a keyboard, and we all know that. It talks about other parts. China, of course, is already pretty much a cashless system. He talks about Jim Rickards, having been making this point for more than a decade. He's talked openly in the previous books, The Death of Money and Currency Wars, about the plans of the IMF to assume the role as a world central bank because the crisis is in process and it will require really greater control by not only central banks, but to be the IMF, the World Bank, with their SDR program. I agree with Jim on this, and now for years, this is the author, the world's elite, have discussed these things openly and have written white papers about it. So, what will it be then? Countries like China are already working on digital versions of their national currencies. Wow, what a surprise. Of course, Morgan Report readers and others, of course, know that as well. The U.S. Congress has tried to slip this language into the recently passed First CARES Act authorizing trillions in bailouts and stimulus money. They wanted to make it digitized and basically push it right into your bank account, which of course is just a digital identification. It's your routing number and your account number, basically. Okay, so gold ownership in Germany is now highly suspect, with the German government openly tracking all gold sales greater than 1,000 euros and less than 1 ounce. Of course, I was kind of right there when the first one was enacted a few years ago, and it was at a gold show in Germany. And the German conferences are extremely interesting to me for many reasons, but one is so many bullion dealers are there. You don't see bullion dealers at most of the resource investment, or what I call gold shows, in size. In the New Orleans show, which has several. In fact, it has probably more than any other show that I do other than Germany. And these are great conferences. All I'm saying is there's just a different attitude about gold in Germany than there is probably anywhere else in the world, because they go there and they buy gold right at the conference. So this has been notched down further, saying that anything more than 1,000 euros, give us your papers, please. Financial privacy basically is a thing of the past. So you can read the rest. I've basically summarized it. Good one, Tom. Thank you. And this is from oilprice.com, the International Energy Association. These minerals are essential for energy transition. Okay, we know the 19er. And this outfit said that it has highlighted the vulnerability of global supply chains, including those critical and essential for a number of clean technologies, while the world needs supplies of lithium, cobalt, nickel, copper, platinum, and rare earths, the International Energy Agency said last week. Goes on to talk about it, very short article, says they're essential. And one thing it points out here at the end is lithium-ion batteries and hydrogen electrolyzers are ready for the big time. They have many things in common, are well suited for mass manufacturing. Putting them in recovery plans can push their costs down and make them cornerstones of the modern energy systems. Of course, that's unless you have a silver-based battery that beats the heck out of any lithium battery. But I'll save that for another day. Moving on to precious metals, this is from CNBC. Squawk Box Barrick CEO says there's a rising demand for gold as a self-funded insurance policy in a global crisis. Barrick Gold's CEO Mark Bristow on gold demand amid the 19er. As gold prices climb back towards their all-time highs, Barrick's CEO sees the industry providing certainty during uncertain crisis. In response to the 19er, we've already taken quantitative easing to another level, and that, of course, puts pressure on paper money. Interesting. You've seen a shift in the base price of gold, Bristow said, adding that demand from China that drove the initial post-2005, as we came out of the hedging crisis, the mining industry itself added a whole lot of supply back to that rising gold price, and in fact, in the process, destroyed a lot of value. Interesting comment. We have a 10-year plan at $1,200 gold, Bristow said. Barrick reports earnings on Wednesday. All right, well, that brings us pretty much to the end for this week's Weekly Perspective. Again, at the start of this Weekly Perspective, I will be speaking on a virtual seminar sponsored by the Money Show. If you just type in Money Show, May Investment Conference 2020, something along those lines, you'll get there. And I'll be featuring this What If Silver Were Treated Like Gold presentation. So I'll wrap it up. Remember, there's nothing more powerful than the truth. And we will leave it at that. I'll be back with you next week for another take on the Weekly Perspective.